Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which clearly is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows every single time the market broke out and created a new all-time high. Immediately it followed with a correction, printing a new higher low and then continued higher. Now this is typical and exactly what you would expect when you are in an uptrend, this series of monthly, in this case, higher highs and higher lows. That is what defines an uptrend itself. However, after every new impulse to the upside, what you expect is first a correction and then the continuation to the upside. So in this case, the next logical step would be first to see a potential correction and then more bullish continuation if this trend is to continue here from a monthly standpoint. So let's keep all of this in mind and drop down on the weekly time frame. From a weekly perspective, the situation does seem quite clear as well. We can notice that from a pattern standpoint, we had first this massive impulse, then we had this consolidation in the form of a wedge formation. We had this wedge pattern created exactly here, and then we had the breakout to the upside. Now, this is a very popular pattern. You have the impulse, then you have the consolidation in the form of a triangle formation, and then you have a breakout to the upside. I'm sure you saw this happening in the market over and over again. However, if we look at the impulse phase, so this move here to the upside, we can notice the same characteristics of what we have already identified on the monthly time frame. So essentially, an uptrend with the creation also here of weekly higher highs and higher lows. Also here, the last step was the impulse to the upside. The next logical step would be first a correction for the creation of a higher low, and then the creation of a new weekly higher high if this weekly uptrend is to continue. Dropping down on the daily time frame, what do we see? Now, here on the daily, I did speak about gold just a few days ago when the market was around this area. I made a full breakdown explaining all the reasons for which I was expecting this correction and for the market to be attracted to this level as a magnet for the price. And that is in fact exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, why I was expecting the market to reach this zone? Because in a situation like this where you have one red candle in a strong push to the upside, this usually indicates that this is a level at which traders are paying attention. So they're looking at that level and it is previously acting as resistance. Once the market breaks it to the upside, it becomes support. So if the market then goes and retests the level as previous resistance turns support, we essentially have a test of what kind of liquidity and demand we have inside of this zone. So at the moment, so far, the market has been behaving as you would expect in a situation like this. Now, before we go into more details into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing, and let's look at the data precisely for gold. Now, for gold here, what we can see is that in the long term, we still have 202.2k net positions. This shows how there is a huge amount of longs compared to shorts on gold. 271k longs compared to only 69k shorts. So institutions are still aggressively positioned to the bullish side of this market with 1,800 longs added just with the last report. But even though in the very short term, we see this decrease in net positions from 300K to 202K. So in this short term, I was expecting a correction. In the long term, the bullish positioning is still quite clear. So especially if this market will go for a stop hunt below this level, so essentially creating a monthly M pattern, there is definitely a possibility from there to see a potential push higher. Now, why an M pattern? Now, M patterns are very effective patterns because they're essentially manipulation patterns. Because if you have an impulse correction and then the market starts going higher, retail traders tend to place their stop losses below the low, right? So as the market is creating this impulse correction and then starting to go higher, they tend to long and put their stop losses below the low. So if the market then drops, all those stop losses get liquidated, and all that liquidity can be used by institutions to actually add even more longs. And that is why very often after an M pattern, the market follows with a push to the upside. We see, for example, an M pattern here. After that, the market rejected to the upside. So if the market here will actually create more bearish continuation from this level to the downside, at that point, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.